Welcome to the SafeSimpleSound podcast, where we believe that true financial confidence comes from resolving the contradictions in your financial life, not ignoring them. Our constitutional approach to financial planning is designed to create both-and solutions, where you can have both safety and growth, both simplicity and sophistication. Today, we are concluding a crucial three-part series on the constitutional basics of insurance. In our previous episodes, we established the validity of these contracts, why they exist, and how they create a safety net. Then, we explored the rules of the game, looking at why insurance contracts are different from a standard business deal. But today might be the most critical conversation of all. We are exploring the concept of keeping the promise. We are diving into a topic we recently wrote about on the SafeSimpleSound blog, specifically addressing the contradiction between the static nature of a signed document and the dynamic, fluid nature of your actual life. Think about the moment you sign an insurance policy. The ink is dry, the premium is paid. You take that document, put it in a file drawer, or save the PDF to a folder you rarely open. You feel a sense of relief. You've done the responsible thing. You've checked the box. But here is the challenge we see patterns of in our practice. 10 years go by. Life changes, behaviors shift, then a claim happens and it gets denied. Why? Because, as our S3 framework demonstrates, a contract isn't just a static piece of paper. It is a living relationship that changes based on how you behave and how the insurer behaves. Today, we are going to unpack complex legal concepts, specifically waiver and estoppel, and translate them into simple, actionable wisdom. Whether you are a business owner protecting your livelihood or a family protecting your home, this episode will give you the sound strategy of time coexistence. By the end of this episode, you will understand how to steward your policies so that the promise made today is still valid 20 years from now. Let's begin by looking at the core challenge identified in our recent writing. The contradiction here is fascinating. On one hand, we view contracts as static guarantees. We think it's in writing, so it's set in stone. But on the other hand, life is dynamic. We miss a payment here. We have a conversation with an agent there. We renovate the house. We change business operations. From a SafeSimpleSound perspective, ignoring this contradiction creates a fragility in your financial plan. You might feel safe because you have the paper, but without the sound management of that relationship, the safety might be an illusion. So let's apply the simple part of our framework to some heavy legal terminology. To understand how your behavior changes your contract, we need to understand two concepts: waiver and estoppel. Now, don't let those words intimidate you. In our practice, we believe legal terms are just fancy wrappers for common sense human interactions. Let's start with waiver. In the legal world, a waiver is defined as the voluntary abandonment of a known legal right. What does that mean in plain English? It means if you have a rule, but you choose not to enforce it, you might be giving up your right to enforce it later. Think about it like this. Imagine a parent who sets a curfew for their teenager at 10 p.m. That's the contract. But for 3 weekends in a row, the teenager comes home at 10:30 p.m. The parent sees them, says hello, and goes to bed. No punishment. No warning. In this scenario, the parent has waived their right to enforce the 10 p.m. curfew for those specific instances. They abandoned their right to ground the teenager because they accepted the behavior. This leads us directly to the second concept, estoppel. Estoppel is the shield that comes after the waiver. It essentially means stopped. It stops someone from changing the rules back after they've already waived them. Specifically, if the other person relied on that behavior. Going back to our teenager. If the teen comes home at 10:30 p.m. on the fourth weekend and the parent suddenly tries to ground them for being late, the teen could argue if they were a lawyer. Wait a minute. You accepted this behavior 3 times in a row. I relied on your pattern of acceptance. You are now estopped from enforcing the strict 10 p.m. rule without giving me fair warning first. This is exactly how insurance works. It aligns with the constitutional principle of good faith. If an insurance company establishes a pattern of accepting late payments without complaint, or if an agent tells you, don't worry about that exclusion, and then they try to deny a claim based on the strict written rules later, the legal principle of estoppel may step in to protect you. However, and this is a big however, from a safe and sound perspective, we never want to rely on a legal battle to get our claims paid. We want clarity, we want certainty. The sound constitutional solution here is what we call time coexistence. We must manage the policy with long-term vigilance. We cannot treat the policy as a set-it-and-forget-it item. We have to view it as a relationship that needs to be maintained. We have observed through our S3 practice that most claim disputes aren't caused by evil insurance companies trying to trick you. They are caused by what we call silent breaches. These are small failures in communication or documentation that compound over years. It's the missed email, it's the late payment, it's the unrecorded conversation. This connects to the S3 desire for stability. Stability isn't just about buying the right product, it's about maintaining the right behaviors surrounding that product. In the next segment, we're going to look at exactly what this looks like in the real world and how a lack of attention here can jeopardize even the best financial planning. To really understand the weight of waiver and estoppel and why our SafeSimpleSound approach places such a heavy emphasis on stewardship, we need to see it in action. Let me share a hypothetical scenario that illustrates this constitutional principle. While this story is fictional and created for educational purposes, it demonstrates patterns we frequently observe when families or business owners apply or fail to apply S3 thinking to their risk management. Meet a fictional business owner named Clyde. Clyde owns a successful artisan bakery. He's a craftsman, very focused on his product, but perhaps a little scattered when it comes to his back office administration. 10 years ago, Clyde bought a comprehensive business owner's policy. It covers his building, his ovens, and provides business income if he has to close for repairs. The written contract, the policy, states very clearly that premiums are due on the 1st of the month, and if not paid by the 10th, the policy will lapse. Now, for the first few years, Clyde is diligent, but as the business grows, he gets busy. He starts paying on the 12th, then the 15th. Occasionally, he pays on the 20th. Every single time, the insurance carrier accepts the check, they cash it, they never send a cancellation notice, they never send a warning letter saying, Clyde, strict compliance is required. They just take the money. This creates a pattern. In legal terms, the insurer has likely waived their right to cancel the policy strictly on the 10th. Clyde relies on this. He thinks, as long as I pay within the month, I'm safe. Now, fast forward to a cold February. Clyde is busy with Valentine's Day orders. He forgets the check entirely until the 25th of the month. On the night of February 24th, a pipe bursts in the bakery. The damage is significant. He has to shut down for 3 weeks. He calls the insurance company to file a claim. But this time, the adjuster looks at the record. They see the premium for February hasn't been received yet. They look at the contract, which says, must be paid by the 10th. The insurer denies the claim, stating the policy lapsed for non-payment on the 10th. While this story is fictional, it demonstrates exactly how the dynamic nature of life clashes with the static nature of a contract. If Clyde took this to court, he would argue estoppel. He would say, you accepted late payments for 5 years. You waived the strict deadline. You are estopped from denying coverage now because I relied on your pattern of behavior. There is a very good chance Clyde would win that argument. But ask yourself this. Does Clyde want to be in a legal battle while his bakery is underwater? Does he want to spend 2 years in litigation fighting for a payout he needed yesterday? That is not a safe or simple outcome. It creates massive stress and financial instability. Through this example, you can see how constitutional thinking applies. The sound approach isn't just knowing you might win a legal argument, it's preventing the argument from happening in the first place. But there is another layer to this hypothetical scenario that makes it even trickier. Let's say that a year prior, Clyde spoke to his insurance agent on the phone. Clyde asked, hey, is my new delivery van covered under this policy? The agent, in a rush, said, yeah, sure, don't worry about it, you're covered. But the agent never added the van to the written policy. This brings us to a critical legal concept called the Parol Evidence Rule. This rule generally states that a written contract takes precedence over oral agreements. If Clyde crashes that van, and the policy explicitly says scheduled autos only, and the van isn't on the schedule, the insurer can point to the written document. Clyde might say, "But the agent promised me." The court applying the Parol Evidence Rule would likely say, "The written contract is the final authority. We cannot consider the oral conversation because it contradicts the clear written text." So, Clyde is stuck. He relied on a handshake or a phone call rather than the written word. Whether you're facing a situation with business insurance, life insurance, or even a home policy, these principles hold true. The sound takeaway here is that reliance on oral promises or sloppy habits creates vulnerability. In our S3 framework, we believe in rigorous documentation. If an agent makes a promise, we require it in an email. If a practice changes, we request a rider or an endorsement to the policy. If we are paying late, we fix the system so we pay on time every time, removing the ambiguity. This aligns with our constitutional value of explicit intent. We want the intentions of the contract to be clear, written, and undeniable. We never want to leave your family's financial safety net up to a judge's interpretation of a phone call from 5 years ago. As we wrap up this series on the constitutional basics of insurance, let's summarize the key insights we've uncovered today. We established that contracts are not static, they are living relationships. We learned about waiver, the giving up of a right, and estoppel, the rule that stops someone from taking that right back. And we touched on the Parol Evidence Rule, which reminds us that the written word is king. But knowledge alone isn't enough. We need a sound strategy for implementation. The solution we advocate for in our SafeSimpleSound practice is prevention over cure. We don't want you to be an expert in fighting claims denials. We want you to be an expert in preventing them. This is why we emphasize the importance of an annual soundness review. This isn't just a sales meeting, it is a constitutional checkup. It's a time to ask, have our behaviors drifted from the contract terms? Have we made oral agreements that need to be written down? Has our life changed in a way the paper hasn't caught up with? By conducting this review, you align the paper with the practice. You eliminate the silent breaches before they become critical failures. This episode draws directly from our recent blog post, Keeping the Promise, which you can find at SafeSimpleSound.com. In that post, we've included a specific framework for this. Through our S3 approach development, we've created a resource called the Claims Defense Shield. It outlines the proactive steps to prevent waiver and estoppel issues. It's a checklist that helps you defend your future claim today while things are calm. If today's S3 insights resonate with your family's situation, we invite you to explore what constitutional financial planning could look like through our SafeSimpleSound practice. We love helping families turn these complex legal abstractions into simple, solid peace of mind. But even if you never work with us directly, you are now equipped with a powerful constitutional capability. You now know that your behavior matters just as much as your signature. You know to get promises in writing. You know to pay on time, not just to avoid fees, but to protect the integrity of the contract. That is the essence of educational generosity. You are now a better steward of your own safety net. Thank you for listening to the Safe Simple Sound podcast. Remember, financial wisdom isn't about predicting the future. It's about preparing for it with a constitution that can handle whatever comes. Stay safe, keep it simple, and ensure your plan remains sound.